Good morning and welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we try to help you stop overpaying taxes and start building real retirement wealth. Today's topic is, who is the custodian of a self-directed 401k? So also, this is your chance to get answers. Go ahead and use the chat to ask your questions, type them over so we can be sure to get to them. They don't have to be specific to today's topic. They can be regarding any aspect of self-directed 401ks and even self-directed IRAs. I don't see any questions at the moment, so let's get started here. So let's first understand what people, so when people hear the term self-directed 401k, also known as a solo 401k, one of the most questions that we get is, who is the custodian of the plan? So there's often confusion between the custodian and the trustee of the self-directed 401k. While both roles are required, they serve very different functions. Understanding the distinction is critical if you want to take full advantage of the flexibility and cost savings that a self-directed 401k offers. So a self-directed 401k is commonly referred to as a solo 401k. And it's a retirement plan designed for self-employed individuals, business owners with no full-time W-2 employees other than other business owners or their spouses. So as long as your self-employed business does not employ what's referred to as a common law, that is a non-owner W-2 employee who works 1,000 hours or more in your business, then you can open a solo 401k plan. So that's critical, making sure you understand if you qualify to open up a self-directed 401k. You can always exclude contractors that work in your business, regardless of how many hours they work. And you can always exclude those who are under age 21, even if they are W-2 employees and work over 1,000 hours. So unlike many brokerage-based self-directed plans or solo 401k plans, which limit investments to mutual funds and maybe stocks, a, a properly structured self-directed 401k allows investments not only in equities, but also in alternative investments, such as real estate, precious metals, cryptocurrency, and of course, private placements. That's just to name a few of the alternative investment types out there. The key is that those types of investments are not prohibited under the IRS Internal Revenue Service Code. So even though it's self-directed, the plan is still legally required to have the custodian of the actual liquid funds, as well as the equities. So who is the custodian of a self-directed 401k? So in order to serve as a custodian of a self-directed 401k, it must be a depository taking institution, such as a bank, a credit union, and a brokerage firm. These are some examples. Some examples of brokerage firms that many of our clients here at my solo 401k financial use as the custodian of their self-directed 401k plans that they open through us is Fidelity Investments and Charles Schwab. So even though Fidelity Investments and Charles Schwab offer their own solo 401k plan, they will also provide what they refer to as non-prototype, investment-only company retirement brokerage accounts for a self-directed 401k offered by my solo 401k financial, for example. And because you have to have a depository taking institution serve as the custodian of the liquid funds, the Fidelity Investments and Charles Schwab perform that role. And you can also invest in equities from that same brokerage account. And you can even invest in alternative investments through those same self-directed brokerage accounts for the self-directed 401k offered by a provider like my solo 401k financial, because it's our plan that allows for investing in alternative investments as well as equities. So, in short, the custodian's role is quite simple. They hold the plan's cash and the equities, stocks, mutual funds, because they serve as a broker dealer slash depository taking institution. And that's it. That's their role. So they do not approve your investments. They do not analyze your transactions. They do not manage the plan. They're just acting as a depository taking institution, aka custodian of the liquid funds. So in a properly structured self-directed 401k, the custodian's role is intentionally limited. So that's by intention. So that way you're able to serve as trustee and fully self-direct that 401k. Okay, let's take a look at some questions here again. Before we discuss our next slide here, let's check to see if we have any questions. As always, go ahead, type over your questions. They don't have to be specific to today's topic. They can be surrounding any aspect of self-directed 401ks and even self-directed IRAs. Also, if this information is helping you feel more confident about your retirement future, please take just a moment to like and subscribe. It helps us get the word out to other solopreneurs like yourself. Also, by subscribing to our YouTube channel, you're gonna get on our list to receive notifications of all our crucial content that we deliver every day to help you secure your retirement. Let's take a look at a question here. I just opened my solo 401k with Schwab. I'm trying to move money into the after-tax sub-account from a Capital One account. How can I do that without checkbook access to either account? Linking online banking wouldn't work with Schwab for these type of accounts. Great question. And when you utilize Schwab for the company retirement brokerage accounts for a self-directed 401k, one of the items that I hear individuals talk about is that they're not able to link their bank account to that Schwab brokerage account for making annual contributions, for example. And that's one of the reasons many clients like to use Fidelity Investments instead, because Fidelity Investments does not place that limitation. You're actually able to link your bank account to those Fidelity brokerage accounts so that you can make contributions electronically. Now, with Schwab, they will not allow you to link an external bank account to that Schwab brokerage account. Instead, you either have to make those contributions by check, so you have to mail in the checks to Schwab, or you have to take them to the local branch, or you would need to open up a personal brokerage account at Schwab, and then you would make the contribution into that personal Schwab brokerage account, and then you would link that Schwab personal brokerage account to that solo 401k brokerage account, and then you would be able to make contributions electronically. Let me pull up some information from our website. Give me a moment here. I'm going to share a link from our website regarding that goes over those options of making contributions to those Schwab brokerage accounts. Take a look at this link right here that I just shared. So take a look at that, and then we'll take a look at some more questions here. We've got a question here from, give me a moment here. So here's a question here. I saw a video on your channel that says to calculate employer solo 401k contributions for an S corp, we need to look at box 1 and box 12 of the W-2. That's exactly right. So if your self-employed business is taxed as an S corporation or C corporation, the starting figure for all contribution types, whether it's employer, employee, and voluntary after-tax solo 401k contributions, are going to be based on box 1 of the W-2, which is the gross wages. Also, you may need to add any amount that's listed in box 12A to box 1 so that you calculate the contributions based on the full allowed amount. Okay, let's do some more. Let's take a look at some more. Let's see here. I asked ChatGPT and says consider box 1. Well, that goes to show you that you can't trust what ChatGPT says all the time. I would call that hallucination. I'm sure you're uh, familiar with that word in the context of AI. So that's why it's always good to ask professionals. All right, let's see if we have any more questions here. We'll come back here. Go ahead and keep typing over your great questions, and we'll continue to go over the questions. In the meantime, let's continue here with our presentation here. So today's topic is, who is the custodian of a self-directed 401k? Let's continue uncovering this. So we talked about the custodian's role. Let's talk about the trustee's role of a self-directed 401k. So in a self-directed 401k, aka self-directed solo 401k, the business owner, so you effectively serve as the trustee of the plan. So this is where the real power and flexibility comes in. So as trustee, you are responsible for directing investments, whether stocks, exchange traded funds, or alternative investments like precious metals, real estate, cryptocurrency, promissory notes, the list goes on and on. And you are also responsible as a trustee for approving transactions, which means that you are the one that decides what to invest in and ultimately approve the investment. So, for example, you're going to be signing contracts on behalf of the plan. Let's say you invest in a private equity fund. You're the one that would sign off on those investment offering documents, the subscription agreement, for example, the offering memorandum, and so forth. In the context of real estate, because a self-directed 401k allows for investing in rental properties, for example, where the self-directed 401k takes title to the property and it also lists you as a trustee, you are the one that would sign off on all those investment documents in connection with that real estate purchase. You're also going to be safeguarding some of the plan assets. For instance, when you invest in a rental property, you as the trustee of the plan will safe keep the recorded deed in the investment documents. However, if you're investing in precious metals, that's a little bit different because even though you are the trustee of the plan, and while the regulations do allow for investing in physical precious metals, as long as they're a certain type and purity, you have to hold those precious metals with the depository taking institution. In other words, you cannot hold on to those metals at home or your office. And I don't think you would want to do that anyway. So that's awfully dangerous. That's like inviting ants to a picnic. So instead, those physical metals need to be held with an approved depository ticket institution, such as your local bank or credit union, and a safety deposit box. Or you can use a depository firm like Delaware Depository, but most clients don't like to use a depository firm like a Delaware because they end up storing your metals with everybody else's metals. So what's going to happen if you need to get hold of your metals or some event occurs? Are you going to really get your metals back? So for that reason, clients like to use their local bank to hold those precious metals in a safety deposit box that's specifically used to hold those specific precious metals, not any of your personal assets. So while you are the trustee of the plan and you are responsible for looking after the assets of the plan, in the context of real estate, in the context of precious metals, they need to be stored in a safety deposit box, for example, and only that safety deposit box can only be used to store precious metals and other assets of the plan. So those are some things to understand. So, and you also want to ensure that you follow the IRS regulations when you're making investments. Here at my solo 401k financial, we often assist clients in understanding the rules and regulations before they make an investment, especially real estate, precious metals, and so forth. And that's a service that we provide at no additional fee. So we educate our clients in the rules and regulations, kind of like I'm doing now. So I gave an example already regarding real estate. So just to review, if your solo 401k or self-directed 401k invests in a rental property, you as the trustee sign the purchase documents on behalf of the plan. And then you're going to direct the bank or brokerage firm to wire the funds to the title company for that rental property investment. And then you're going to maintain safekeeping of the recorded deed, which is going to be titled in the name of the 401k. So because you are the trustee of the 401k, there won't be any transaction fees, no asset holding fees, no per investment processing charges. Those type of fees are typically charged by a trust company who also offers a self-directed 401k where they will hold on to the investments, they'll process the investments. They don't actually review the investments for compliance. They just review it to see if they can hold on to that type of investment on their books. So don't confuse that. So with this structure here, it can significantly reduce ongoing costs compared to many trustee controlled self-directed IRA structures or self-directed 401k structures where you have a trust company involved. Okay, let's take a look at some more questions here and then we'll come back and keep going over our slides here. To get the $1,500 auto contribution credit, it mentioned needing to have auto contribution set up, but then mentioned being able to cancel it. That's exactly right. I plan to do that once year lump sum contributions. Am I eligible for tax credit? And if so, how do I set up and cancel the contributions? You're exactly right. That's what's great about the auto contribution credit. You're not required to contribute to the plan in order to qualify for it. What is more, you can still contribute even if you want to up to the overall limit, as long as, of course, you have the required earned income from self-employment activity. So as long as the plan has the auto contribution feature built into it, which our plan does, and there were some attachments provided with the setup plan documents where you automatically opt out of having to contribute 3% as an annual contribution to the plan. That means that by opting out, you're opting out of only contributing 3%. And as a result, you can still contribute, or you can choose not to contribute, but you can contribute all the way up to your overall limit. And you're still going to be able to claim the auto contribution credit because the plan has the auto contribution credit built into it. So in sum, you just need to make sure you have a plan that has the auto contribution credit built into it. So good question. Okay, let's talk about the how a self-directed 401k can help reduce fees. So one of the greatest advantages of a self-directed 401k is cost control. And that's because you serve as trustee of the plan. So there won't be any transaction fees, no per asset holding fees, no processing fees, except for maybe a wire fee that your brokerage firm or bank would charge if you're investing in real estate, for example. There's no annual valuation fees for each alternative investment. So, for example, if your solo 401k owns rental real estate, you as the trustee will safekeep the deed. You do not pay an outside custodian or trust company to hold the document or to process rental income transactions because you can have those deposited directly into the solo 401k bank or brokerage account. So in this case, the custodian of the cash, aka Fidelity, Schwab, your local bank or credit union of the self-directed 401k, simply acts as the depository institution holding the cash or the securities if you invest in equities. Okay, so it's important to also clarify that don't confuse brokerage self-directed with true self-direction. For example, some brokerage firms advertise a self-directed 401k, but limit investments to stocks, ETFs, mutual funds. I know Charles Schwab oftentimes refers to their self-employed 401k as a self-directed 401k. And they use that in the context of being able to invest in equities. So it's not a truly full-blown self-directed 401k. So while technically self-directed within their platform, it's not truly open architecture self-direction in that you can invest in alternative investments like real estate and promissory notes, for example. And it doesn't always allow for solo 401k participant loans. Whereas a properly structured self-directed 401k, you serve as the trustee, and therefore it allows for not only equity investments, but also alternative investments. So you always want to verify whether you truly are opening up a self-directed 401k that's truly self-directed, or whether the trust company actually controls the investments. And we already talked about some important rules regarding investing in precious metals. So we'll skip that. So let's talk about some advanced strategies. So that's one of the great things about a self-directed 401k are advanced strategies because you are the trustee of the plan. So you also control whether the plan uses advanced strategies, such as being able to take a 401k participant loan where you can borrow 50% of your solo 401k balance, not to exceed $50,000. The plan offered by my solo 401k financial does allow for participant loans, for example. Also, if you want to process an end plan conversion, where you're converting pre-tax solo 401k funds to the Roth solo 401k. Another major advanced strategy is the mega backdoor Roth strategy. With the truly self-directed 401k, such as the one offered by my solo 401k financial, you can process a mega backdoor Roth solo 401k strategy where you can make voluntary after-tax solo 401k contributions, which is a way to indirectly get more Roth funds into your solo 401k plan. And you can make those contributions all the way up to the overall limit for the year, which is $72,000 for tax year 2026, for example. And then convert that full $72,000 that you make in voluntary after-tax solo 401k contributions to the Roth solo 401k or the Roth IRA. So in short, the custodian does not decide these advanced strategies. You do as a trustee of the plan. And also, some of the advanced strategies is also being able to take the auto contribution credit, which is a $1,500 auto contribution credit, which is spread out over a 3-year period in $500 increments, where essentially the government is subsidizing the cost of opening and having a self-directed 401k for many years. You claim that $500 credit each year for a total of 3 years in $500 increments for a total of $1,500, and you'll file Form 8881 each year to claim each of that $500 auto contribution credit. Here's a question here. I don't plan to invest in real estate, crypto, alternative investments. Is there a reason to have checkbook access or a bank account in the name of the plan? Great question. So keep in mind that checkbook simply means the ability to invest in alternative investments, as well as being able to process a solo 401k participant loan, perform the mega backdoor Roth. So you don't have to use the checkbook function, and most clients don't even use the checkbook function. If they want to invest in an alternative investment like real estate, they'll have funds wired out. So in short, you are not required to invest in alternative investments like real estate. You can choose to invest in equities or other types of alternative investments, or use the other features of the self-directed 401k, such as performing the mega backdoor Roth, for example. Here's a question. If I set up the plan now, can I claim a $500 credit for 2025, or does it need to start in 2026? Great question. So while you can set up a self-directed 401k plan in the current year so that you can make prior year contributions, which depends on how your self-employed business entity type as to whether you can make employee, employer, and voluntary after tax, you would not qualify for the $500 auto contribution credit until 2026, because the plan was not set up by December 31st of 2025. So the auto contribution credit is a little bit different regarding those rules with regards to when you can actually open a plan so that you can make contributions for the prior year. So good question. So let's talk about some key takeaways regarding today's topic, which is, who is the custodian of a self-directed 401k? So a self-directed 401k, again, is required to have a custodian of the cash. You cannot hold the plan's funds under your mattress. They have to be held with a depository taking institution like a bank, brokerage firm. And that's one of the reasons a lot of clients utilize my solo 401k financial. And that's because you get to choose where to hold those self-directed 401k funds. We don't steer you to a particular bank or brokerage firm. We're not aligned with any bank or brokerage firm. Many of our competitors may be in that category where they may be aligned with banks or brokerage firms. Not here at my solo 401k financial. We let you decide where to hold your funds. So you always have to have a custodian of the funds. However, with the self-directed 401k, you serve as a trustee. So the custodian, the bank or brokerage firm will hold the funds. So that's where they act as the custodian. So the trustee directs and controls the investments. So the power of a self-directed 401k lies not in eliminating the custodian, but in limiting their role and empowering you as the trustee. Okay, let's see if we have some more questions here. I am wanting to do a mega backdoor Roth. Does that change the answer about needing checkbook access? No, it does not. Okay, let's see here. Here's a question here. Do I need to open a local checking account under the 401k trust name to then fund Fidelity? Do I need to open? No, you do not. So that's something that I don't know. I mean, I can only suspect. Some other self-directed 401k providers will make you open up a bank account, and it's typically with the bank that they may be associated with. And then they'll say, if you also want to have a brokerage account, then you got to open both a bank account with this particular bank. And then if you want to open up a brokerage account, you would do it with Fidelity. You would make the contribution into the bank account for the self-directed 401k. And then from there, move the funds to the self-directed 401k brokerage account. Well, that's incorrect. With the self-directed 401k, especially one offered by my solo 401k financial, you don't need to open up a bank account and a brokerage account. Most of our clients will open one or the other. Many of our clients will use Fidelity Investments to hold the self-directed 401k funds for the plan offered by my solo 401k financial, for example. They'll even use Charles Schwab, but Fidelity is a very popular one as well. And they're able to link their business bank account to that Fidelity brokerage account for the self-directed 401k offered by my solo 401k financial for making contributions and even making investments in real estate, for example. Let me share. I think I shared this link earlier regarding, let me pull it up here, regarding making contributions to your Fidelity Investments non-prototype brokerage account for the self-directed 401k offered by a self-directed 401k provider like my solo 401k financial. Take a look at that link right there. You can actually make contributions electronically. You would link your bank account to that Fidelity Investments non-prototype brokerage account for a self-directed 401k offered by my solo 401k financial. Okay. Now, the only time I see clients also opening up a bank account for their self-directed 401k is if they want to invest in cryptocurrency. And that's where, with the bank account, in order to invest in cryptocurrency, you would open up a bank account in the name of the self-directed 401k. You would also open up the account at the exchange, let's say Gemini, in the name of the self-directed 401k. And then you would link your self-directed 401k to that Gemini self-directed cryptocurrency account. Excuse me. Okay. I think we've come to the end of our session. So again, thank you for joining today's webinar and investing your time with us. Your time is valuable, but we feel that your retirement future depends on it. So if you haven't yet, please like and subscribe so that we can keep building this community. Please like us across the different social platforms, subscribe to our YouTube channel. We'll be back here again tomorrow with more crucial content to help you secure your retirement. Until next time, have a great rest of the day.